Hey guys, Landy here, and I'd like to welcome you to Landy's Crypto Corner. Today is March 16th, 2023, and I'm just going to do a fairly quick update to yesterday's video. So if you aren't familiar with some of the things that I'm looking at right now, please refer to yesterday's video. I will link it in this video as well. So there should be a card or something that pops up, and or down in the description, I will include a link to yesterday's video. So in yesterday's video, I had talked to you guys a little bit about uh, Renko candles and the way that Renko candles paint bricks. Now, to just recap, in Renko, the candles are called bricks because you can set or customize a brick size or a, a specific price point that must be met for it to paint a new candle. They are not time based, but you can still use, in this case, I'm using an ATR instead of a specified brick size. So it's running a 14 period ATR, and that particular 14 periods is going to be time frame dependent, even though the bricks or candles do not close on, for instance, the daily, with the calculation for ATRs being run on the daily here. And I had noted yesterday some very specific places to watch. And excuse me, one of those places was $24,000 to the downside. And if we were going to be breaking those highs that we saw here on the Renko chart and looking for another brick to paint, we needed to see it move above, in this case, $24,844, which was the Renko high. So you're not going to see it wick to exactly where things went, which was 26,550 prior to this on that particular candle. So, or the candle before, in fact. So that is it's meant to filter out some of that volatility by using, in this case, the average true range on a 14 period look back of 1,000 candles. So in this case, what we saw in yesterday's closure for the Renko chart is a new brick confirm. Now, what does that mean? Well, that actually implies higher prices. Now, something that I will note, I had mentioned yesterday on the weekly, there just isn't enough data for the second and third standard deviations. I had to make that note in the comments because I went back and I listened to it and I was like, it's not very clear why I was looking for the first standard deviation, but not the second and third. First standard deviations are a single deviation away from price action, is going to be a little bit more reliable than the second and third with such a short bit of history on the Renko chart. On the daily, you can use Bollinger Band's first, second, third standard deviations as areas of interest. So in this case, where are the next areas of interest for the Renko chart? Well, it's actually right where we're seeing price trade right now, and that's going to be at the 25,520, which is the teal line. You can see the brick projection is where price is currently trading, 25,778 or so right now. Excuse me. Allergies are kicking up right now. My apologies. And this does give me the bias that price is going to test higher. So the current highs on a regular chart right now are going to be 26,550. So right at this very moment, Renko candlesticks and bricks, I should say, because that's actually what they're called, are projecting that we will go test the highs. And we're seeing that same look here on a regular chart. So as I said yesterday, below $24,000, I'm looking for, a high to be put in and for price to retrace, to the typical support and resistance areas. In that case, we had already fulfilled a wick test down to around $24,000, just under, I believe, on 23,931. And then, the next area to look was, this lower high the first lower high of the 3 high structure here on the downtrend. So it was what kind of confirmed there to look out for a downtrend on the candle closure on the 3rd of March. But in this case, the next area of support would be 23,631 down to the basis band, or the 20 simple in this case. And again, I have turned off my labels here. I don't really use them in my regular trading, but they are good visual aids for those of you who are new to this. And in this case, looking at the basis band, that's the 20 simple moving average, which is coming in right now at $23,000. Funny enough, if you watched yesterday's video, I made a big point about how $23,000 is my pivot. And for those of you that maybe just started watching some of my videos, the big reason why is, not just support and resistance, but if we go here and we turn on the quarterly volume profile chart, you'll see that it kind of got goofed a little bit here as I tried to pull the line over, but as we zoom in, it'll oscillate a little bit, but this is actually the point of control for the current quarterly that's going to be closing at the end of this month. So losing that point of control then begets further tests down to the bottom side of the range. And that, thesis is now supported in the following closure, with the basis band being at $23,000 right at the quarterly pivot. You can also call it a range pivot if you just pulled the range up here on the volume profile tool. So you'll see that will shift around. These lines actually do line up when you're down looking very closely at the price action. But in this case, they're not quite lining up when we zoom out. But the numbers on the scale for the price pivots there are accurate. Now, when looking at some other criteria I had mentioned is, we want to see price not put in a high. We did not see a high put in. In fact, I had also mentioned that if we saw closures above the close open back here at the $24,844, then I would be looking to run the wick highs again. And that's exactly what we're seeing now as we push up against the upper second standard deviation of the Bollinger Bands here. And again, we can still see price action trade up to around that third standard deviation here on the daily. But I wouldn't, in maybe 27,300, maybe it hits $28,000 if things do trade up that far. But I wouldn't necessarily be looking for closures just yet on the daily. That would have to come over time. As I mentioned, you want to see price kind of grind sideways and up to expand those Bollinger Bands to start giving us those deeper targets here on the daily. Now, for me, I'm a day trader, so I trade swing trade positions that I hold for multiple days. But the bulk of my trading is actually intraday trading, so lower term time frames. I'm down on the I'm looking at the 4-hour, hourly, 15-minute, 5-minute, so on and so forth, and taking trades based on those time frames and based on support and resistance and Bollinger Bands and all that stuff. But in this case, the daily is going to give me that bias that we're going to go test further up. We're now seeing that test further up. If this does get rejected, and it would have to be a strong rejection. So a rejection that's coming in on volume. Let's just turn on volume here. And when looking at this particular range, the highest bit of volume that we have seen in recent history here for spot price action. This is not derivative contracts. This is not Binance or Bybit perpetual futures contracts. This is spot price on Coinbase, and there's a lot of big players that just buy and transfer Bitcoin out of Coinbase still. And it's the largest spot market that we know of. So in this case, the largest bit of volume that we saw did come on that wick high there into the third standard deviation up there at 26,550. But we can still maintain expansion of the Bollinger Bands to the upside as long as we see closures above the first standard deviation. So what does that mean right now? Well, that does mean that as long as price is above, now the pivot has changed a little bit for the first standard deviation, but in this case, anything above 24,400 in this daily closure, as this is going to update on the daily. And, that preserves the opportunity for Bitcoin to continue testing further up and possibly getting a bit of a breakout to the upside and maybe popping up to around that 27,375, 27,500, maybe even $28,000. Now, that $28,000 on the daily would fulfill a test up to, I have not updated this chart in a while, but that would fulfill a test up to this gap here, which we've got on the wick low here. We've got 28,920 to the open there at 27,355. Well, isn't that interesting? Because 27,355 is also pretty darn close to our spot price, third standard deviation, coming in at 27,376. So it's very, very likely that if we see things trading above or back above the 25,888, I would give it a little bit of room here. This is the second standard deviation on the daily. We could, if we do see things trading back above there, especially closing above there, I do think it's very likely that we head up and fill that gap between that 27,335 and $28,000 area. We could also see an intraday spike up that comes up and does the same thing that we saw back here on the 14th, where it spikes up, hits the top side and or exceeds this third standard deviation to the upside here, and fulfills some of those gap fill targets for CME, as well as getting another higher high for this range, and see where the closure comes in. Because if it does close back inside the range, we're probably looking for some downside price action, and I'd say that more than likely we're looking for higher lows than not, and I'll explain why when we just quickly look at momentum here. As Stochastic is still pointed to the upside, volatility is very high, so it's a very volatile market. We can get moves up and back down very quickly. You can see that we're even expanding as we expand the Bollinger Bands here on the daily. We're even expanding the downside. So this is often the case when you see a range forming like this, and then the range begins to widen. That means that price can travel very, very far within that range without breaking structure in any major way. And then pattern traders will call it like the megaphone pattern or whatever they want. But in this case, this is all about momentum, volatility, and support and resistance. So in this case, we're looking for, about $25,900, $26,000. Price starts trading above there. I'd watch out for, around that, around the current wick highs, that 26,550 up here. In this case, it's 26,553 on Coinbase, to around, $27,000 to mid $27,000 area, 27,500, and possibly even intraday price action up to around $28,000. Now, closures are not the thing that I'd be looking for immediately, and if we did see a closure, I'd be a little concerned that things are going to mean revert pretty hard, especially on those lower term timeframes, because it is really pushing the upper end of the Bollinger Bands, which you kind of want to see, like I've said before, is sideways and up with this slow march of expansion on the Bollinger Bands, this slow march of price to the upside, so up and to the right. Now, when looking at the 2-day, which we do have closing with today's daily candle, we can see that we have upside on Stochastic here, and we are looking, to get fully out of the bearish control zone here, as you can see. And we had the 3-day and the 5-day closures, and those are huge. All right. So the 3-day, we had that bit of a pinch in the Bollinger Band. So a little bit of cool down of expansion there. And we did get that 3-day closure above the first standard deviation. So we fulfilled that area. We can see that the first standard deviation is also coming in at 24,500 here. And we're right now pushing up into the third standard deviation there. Second standard deviation, with possible targets up to that third standard deviation, which is coming in at $27,000 or so, just under it at 26,970. So price is, up and to the right here on the 3-day chart. That would imply that anywhere below that 24.4 on the daily would also fulfill the conditions for the 2-day below the first standard deviation. And you can see here 24,530 on the first standard deviation over here. The gray area is covered up by the candle, but the gray upper first standard deviation Bollinger Band there, all coming in around 24.4 to 24, 500, 600 area. So price trades back below there, especially on a daily. You're going to see most likely a test further to the downside here. You can see on the 3-day, it's 23,260. But right now, trading above that second standard deviation opens the door for that third standard deviation on a spike. We've already seen this once on this move up. And, is it possible that we get closures outside of it? Yeah, we got enough contraction where it is possible to see a 3-day closure up there, but I'd be aware of a possible of some pretty nasty mean reversion if we do see that. Just be aware of it. That doesn't mean it's going to happen, but when we look at the 3-day, and this is what I wanted to see, the 3-day, 5-day, the Stochs did complete a fully confirmed cross back to the upside for momentum here. Remember, it is trailing. We put in this low, which was a lower low on divergence, and then march it back onto the upside here. For those of you that have RSI, there's divergence here, and it is a regular bullish divergence. The 5-day, we're seeing the same thing. 5 days opening up the possibility of where 27,221 comes in line, right around the same areas of third standard deviation to the upside. So second standard deviation to the upside here, 27,222 is coming in line with that daily third standard deviation that's sitting at around that 27,375 or so, give or take $100. They're around the same area. So very likely where the 5-day closed, which was above the other 5-day high at the 24,281. We got the closure at 25,051. That means, well, quite frankly, what that means is we're going to test further up. That's what that means from a candlestick perspective. So if you read candlesticks and you understand support and resistance, means that we have the opportunity to continue testing further up around the wicks here, all the way to the wicks over here, and then the open and closes. So, or the close open low here, which is coming in at 29,153. So third standard deviation to the upside here is going to be around that $30,000, kind of giving us that $28,000 to $30,000 range, which would fulfill the gap, and is a pretty major area of resistance overhead. You can also see that where the upper second standard deviation here is on the 5-day, it's coming in right at 25,775. We did, kind of wick into it. Wait, that doesn't seem right. I guess it is. 26,000. Let me actually turn it on. I need to see the slope on this. Give me 1 second. I apologize. So it's headed down. That's what it is. It's the 200 SMA that's headed up. I had it mixed up. I had the colors mixed up in my mind. My apologies. So as the 200 EMA sweeps down and into the second standard deviation, it was higher up there around $27,000 in the last 5-day closure. Now it's sitting at, I'm not seeing why this is actually giving me two different reads, because you know what I'm reading? Current price action. I changed my candle colors, and I realized that maybe I shouldn't have white candles with a white 200 EMA. It's still at $27,000. So a little embarrassing. My apologies there, but good thing that we can just check on it when we have, some reading comprehension issues. So $27,000 where the 200 EMA is coming in. Also would be the second standard deviation to the upside either way, which I don't know why I was getting so confused by that, because the second standard deviation is 27,220. And in this case, close above the 200 on the weekly, or on the 5-day rather, then we're looking, for price action further up, quite frankly. That would be a break, probably see a retest on, lower time frames below the 5-day. But realistically, we're looking for a possible move. Now the 200 SMA, funny enough that I just turned that off, but where's that coming in? 32,161, which is also coming in in line with, right around the highs of this distributive structure here on the 5-day. So keep all of that stuff in mind, because the other thing that I was looking at and that you should be aware of is momentum has gotten an initial cross back onto the upside here on the 5-day Stochs. So now we need to see this follow through with the next 5-day period to get both the K and the D read, pointed back to the north side here where momentum has shifted. Now, of course, this chases. So, this is confirming later, but it is a little bit more confluence to the idea that pressure is to the upside here. The other thing I would like to note is we do see 5-day BBWP pretty low. And, but I would say that we're probably not looking too much further outside of that second or third standard deviation, maybe somewhere in between, maybe a swing above the 200 EMA and then a back test or something before we see things cool down a bit. Because there's not, the Bollinger Band set is very wide right now, which does kind of put a cap in our charts for this 5-day to the upside and the downside. That doesn't mean we don't see closures outside of the third standard deviation, either upper or lower, but it's very, very rare. Very, very rare that we see closures. Typically, we that's the wick catch area is the third standard deviation. So I wanted to kind of update you guys on that. And if you are interested, there is some momentum pivots here, 25,100 or so, somewhere below there on the 5-day. That would, nullify this cross to the upside here. 3 days going to be 22,232. We have that 2-day closure coming in, and that's going to be 21,189. And the daily is looking up above $23,000, 22,900, $23,000. So that big important area that I talked about prior. I would still watch $24,000 if you do see a closure below there. And, you'll get a heads up on that on any closure below the first standard deviation here. That price is most likely headed there on the daily is 24.4. Then we're looking at $24,000. If we break down there, we're looking a little bit lower. So, probably to test that $23,000 pivot. So, but I do want to note one last thing. We're above the value area high here. So on the daily, my apologies, this makes it a giant mess on the chart here. But for the quarterly pivots, you can see that we have adjusted value area high and low. So my apologies, that doesn't line up anymore. The point of control still lines up, but the value areas do not. Got to adjust those. It did update to account for the volume during this last daily closure. Not trading above the value area high, with, from a technical standpoint, the wicks being the target. So that is going to be it for me today. I do think that, from what I am seeing, it's painting the picture that we are going to test further to the upside. But I want to be very, very clear. See price trading back below $25,000 and specifically 24.4. Look out for $24,000. We break down below there. I do want to see $23,000 hold, or else we're just going to be in a giant volatile range with the possibility to run all the way back to the most recent lows and possibly even lower. I don't think we'd be going much lower than that by the way that the Bollinger Bands are spread right now on the daily, at least without some sort of contraction and or cooling down in the price volatility, which of course you can pick up the BBWP. It's a perfectly free indicator by Caretaker, and he has coded this quite well. We would see BBWP cool down. We'll start to see contraction of the Bollinger Bands. You only see that once we're trading back below the first standard deviations, or above the first standard deviation, or lower, below the first standard deviation of the upper, towards the basis band. That's when you see contraction on the Bollinger Bands, and price kind of has to go sideways for a little bit and or head in that direction and then go sideways for really tight contraction like what we saw back here in late February. So that's going to do it for me. If you did find any of this helpful, please like and subscribe. And if you can share this with others that you think might find it helpful as well, please do so. I want to make note that I will or I already have been linking the indicator here. Well, it's tentatively called Landy Bands because I had to name it something with Trend Check. It's a free private indicator. It is in beta. I'm still working on this indicator. I am programming it myself right now. I am going to be getting some help, I think, from some people that are in a private Discord right now. It's not a paid Discord, it's just friends of mine, where we kind of get together and talk about these ideas, and which have encouraged me to actually bring this analysis public anyway. But I believe that some of them are going to be helping me with some of this as well for this indicator. It's going to remain free. When I do post it publicly, you'll be able to search for it in your indicators tab. Right now, you cannot. You must follow the link in the video description below, add it to your indicator set, and then when you go to your chart, you can just throw it on there. There's all kinds of fun stuff in here. It does need to be cleaned up a little bit, but it's got Bollinger Bands, it's got Super Trend in there, it's got some EMAs, it's got SMA. You can play around with the lengths of the first, second, and third standard deviations, Bollinger Band length, which is the basis, Super Trend, ATR, and all that stuff. So I will be adding more stuff to this over time. And if you do pick this indicator up, let me know of anything that you want to see in it. And if you have any comments, go ahead and leave them on TradingView and or even in the video description here. And I will try to add stuff to it. And I'm going to be tightening up a few other things with it. So I want to thank you. You have a wonderful morning, afternoon, and evening, no matter where you're in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, man, it's hard to talk today. With all of that being said, Landy out.